So before we get to it, your food was served at the White House last night. Did President Trump give you a call? What did you think when you heard about that?
Well, I'm not surprised. We're the #1 pizza delivery company in the Washington, D.C. area, and we've been delivering to the White House for decades. So not surprised. Hope they all had a great experience last night.
Let's talk a bit about your strategy as CEO. You've been in this role for just about 6 months or so now. You're expanding here in the U.S., but also part of the strategy is pushing out more globally and becoming a bigger presence internationally. Are you concerned at all about what trade tensions might do to that expansion plan?
No, we've had a successful run of growth internationally now for several decades, and that's spanned many economic cycles and various points of tension between countries over the years. So we're going to keep executing against our steady strategy, and I think things will work out just fine for us, Kate.
You're also doing what you're calling fortressing. So you're building more and more stores here in the U.S. so that consumers are even closer to a Domino's pizza. What does that do for the consumer, and what does it do for your franchisees?
So for the consumer, a couple of great things about it. Number one, it puts our stores closer to the customer. So if we were 8 or 9 minutes away, now we're maybe 4 or 5 minutes away, and it allows us to be more consistent and faster with our delivery. For our drivers, it's great because they can get more deliveries per hour, and that means more tips. And for the franchisee, better retention of those drivers in a very tight labor market. And then finally, for the franchisees, because the economics of delivery get better, over the long run, it works very well for their profitability. Roll that also in with the carryout business that this gives us access to. And overall, it's a great way to continue to grow the presence of our brand in a profitable way for our franchisees.
Rich, I know Melissa Lee has a question for you back in New Jersey. Melissa?
I do, Kate. Hey, Rich. I want to ask you about what analysts are calling your digital moat. You invested early and deeply in digital, which really allowed you to expedite your service, save on costs. But at this point, has the low-hanging fruit been harvested? How much more can you get for return on investment in a digital dollar?
We still feel like there's a lot of runway left for us in digital. Our team continues to innovate and look for new ways to serve our customers, not only in the U.S., but across the international business as well. So we keep listening to our customers, and they keep telling us that they want to order from us in different ways, and our customers can now do that through more than 12.5 different digital channels.
Rich, it's Kelly here, and I wanted to ask kind of a similar question. You guys were the original delivery service. That's what made ordering pizza or Chinese food such a ubiquitous experience here in the U.S. Now you can kind of get food delivered from anywhere. So do you guys ultimately partner with the likes of Uber Eats and DoorDash, or do you try to wall it off and say, no, Kelly, you have to go through the Domino's app, or you have to go to the Domino's website, or call us to get that pizza delivered? How are you going to deal with those competitors?
First and foremost, I feel really passionately about the fact that we've got to deliver our own food. And I want, when a customer orders from Domino's, I want a Domino's uniformed driver to show up and deliver that pizza. It helps us to control the customer experience and also the quality of our product. So something we feel very passionate about, and we've invested in that digital technology that we feel like we've got an opportunity to continue to do this ourselves, to give us not only a service advantage, but also a cost advantage relative to some of those that are out there using third parties.
How many locations does the average or the typical franchisee own, and what is the typical gross? Or give me a range so I get an idea of what one of these locations makes, either low end to high end or whatever. But how many does the typical franchisee own, and what do they make?
So if you take the U.S. business, typical franchisee in our U.S. business is going to have 6 or 7 locations. And what's really important is the level of profitability that our franchisees can drive through those businesses. And as we've talked about, that franchisee profitability is at the center of everything that we do. Our franchisees average around $136,000 in 2017 in profit per store. So you put those numbers together, and an average Domino's franchisee is cash flowing close to $1 million in the U.S.
Rich, I'd love to, in closing, just get your take on the state of the consumer right now. We've had a really volatile stock market. The government, of course, is still shut down. Are you concerned at all about a potential slowdown, and what are you thinking about the consumer through the Domino's lens right now?
What we see here in the U.S., Kate, is still a really strong consumer. Unemployment is still very low. we've had good wage growth, across the U.S. economy over the course of the last couple of years, and we haven't seen any slowdown in consumers' interest in ordering pizza and ordering it from Domino's.